Welcome to SSCPA Tax Educate. I am a professor of accounting, a CPA, and founder and principal of SSCPA Consulting. My students affectionately call me Dr. S. This is our first episode. We encourage you to become a part of the SSCPA family and invite you to like, subscribe, and share this podcast with all of your friends and family. You may have heard the cliche only two things in life are certain: death and taxes. Taxes are to be paid as we earn or at the end of the tax year. If you do not, then you'll owe and may also be responsible to pay penalties and interest on the late payment of taxes. We're going to discuss this in detail in another episode. Our goal for today is to begin educating you on tax issues and how they affect your socioeconomic position and your families directly or indirectly. We will have a great learning experience during each of our episodes. We plan to drop the episodes every week, and at the end of each of our episodes, you can ask questions. We plan to answer those in our short clip episodes on our social media pages, Facebook, Instagram, or during the subsequent episode. So, let's talk a bit about some of the tax related hot topics in the news today. So, taxes are pervasive and affects all of our lives, as you know. Everyone, though, is talking about the recent presidential ballroom that each of us is being asked to pay for. That's right, $1 billion. That is the ask. Well, let's talk a little bit about how that came about. Well, as you know, as you've heard, the current administration wanted to build a ballroom, and it was supposed to be donated by friends and families of the president. However, more recently, he changed that and said that he's asking us, the taxpayers, through Congress to pay that amount. And it went from 200 million, 400 million to now a whole big fat billion. So the Congress is thinking, well, we should be paying that. We should not be. There's some part of the Congress who says that's okay. Others are saying it's not okay to be paying for a ballroom because we didn't ask for it. Neither will you and I be able to be going to there, maybe not in our lifetimes, at least going to the presidential ballroom for any reason. But we ask the question, how can this be? How fair is this? So, the second major issue and controversy is the $1.776 billion that you may have heard in the news. It's a fund that's being created by the Department of Justice to compensate mostly rioters and others who invaded the Capitol on January 6, 2021. If you were alive, I'm sure you heard of that. That was a very major historic event in our country. You may ask also, how can this be? Well, the simple answer is the powers that be make decisions for our money, and we essentially have no control over that. Have you ever thought about this? You work for a company or organization, and before you can purchase a loaf of bread for your family, the taxing authorities deduct their money first, right? Right. Collectively, that money becomes revenue for the federal treasury via the IRS, the Internal Revenue Service, and the states via their various departments of revenue. That money is supposed to be used for the betterment of all of us, the citizens of the states and the United States in general. But is it? Is our money being used for the betterment of or to assist our citizens? Is your life being made better by the monies that we pay into the treasury? These are core questions each of us must ask ourselves every day. To understand and answer these specific questions, we first need to understand the history, the context, and nuances of taxation. We hope to help you learn a lot of this during the next three episodes, which we will begin in here in the next coming weeks. We will continue the episodes and continue talking a lot more about this whole concept of hot topics. The history of taxation is coming up next, and that will be our main lesson. So let's get into our main lesson for this week, shall we? Taxation has evolved from simple ancient tributes to today's complex fiscal systems. Taxation, the history of taxes are always shaped by wars, by economic growth, administrative capacity. And if you think about it, it goes all the way back to ancient Greece and even Rome, etc. So we're going to talk a little bit about that. One of the earliest recorded tax systems that we know is from 3000 BC. And this was kind of interesting because it involved grains and livestock that were levied and documented on what we call clay tablets back in the day. And then we saw that in ancient Mesopotamia, and then we had some history of taxation going back to ancient Egypt as well. Taxes were paid in labor and goods, which scribes recording the contributions of people paying agricultural cycles, and that was kind of a tax base. And then Greece and Rome, Athens especially, used indirect tax like import duties, something probably similar to what we have been hearing in the news as well about tariffs. We'll talk a little bit about that. And then in Rome, they developed what we call a head tax. They had land tax, custom duties, and even a 1% general sales tax. Under Julius Caesar, these were all imposed. And then the early systems, they relied heavily on what government would measure, and it's going to normally based on different variables such as land and people, how much land, how many people are in a certain area. Then we move over to the feudal system, which is based on the European way of looking at taxation from the medieval times. And that was based on the church and the power of the church at the time, the Catholic Church, etc. So the feudal taxation happened where you have lords or landlords where they collected the duties, they collected livestock, labor, etc. And they tied that to the land, to the agrarian productivity. And then the church also had a mandatory tithing system where you have to pay like a 10% on your income or whatever produce you have. You got to pay that to the church. And so there are a lot of examples of that history, but let's talk a little bit more modern. Let's come a little bit more modern from the ancient times. So in the early modern period, there was trade, and you had empires and birth of income tax. That kind of came towards the modern era. So the colonial times, for example, the European empires, they expanded because again by then you had Christopher Columbus that came to the New World, and then they started kind of expanding their way into the New World, and so taxation became a big thing. We had examples of the Boston Tea Party and the Indian salt protest that protested against taxing people. And then there was the rise of centralized fiscal states from the 17th century. That's like the 1600 to the 1700s. You had the monarchies. You had all the kings and the queens and all that. That a little bit about. British monarchies, but there were also other monarchies in other different areas in Europe. They built more a uniform tax system as their bureaucracies matured. They did that. So basically, though, the birth of the modern tax system that we are kind of familiar with a lot of different changes, started in Britain in 1799. This was introduced by William Pitt to fund the neopolitical wars here. So, and then in 1816, they reintroduced this whole tax system permanently. So, this period marks the transition from the land based tax or levies to the monetary tax system that we know right now. So, let's talk a little bit about the industrial age to the 20th century. Right now, the industrial age, that was when wages began to grow, corporations were being formed, trade required structured income, and of course, then came the different wars. We had World Wars One and Two, and all of those things. These were major shifts in literally restructuring the tax system around the world and here in the United States. We'll talk a lot more about that. But the federal systems in the United States, federal tax system, started in 1861. And what was happening then? The Civil War. So they started with a tax to fund the war, but that was actually repealed by Congress in 1872. And also then the Supreme Court of the United States, they struck down the income tax in 1895. We're going to fill in some of these gaps later. But the most important change or shift in the United States tax system came in 1913. In 1913, this what happened here, the 16th Amendment became a thing where they had an amendment to the Constitution. It's the 16th Amendment where the government started to impose taxes. It was one to fund World Wars One and Two, and then that kind of started the more modern taxing system. So let's talk a little bit about the core concept here. We had some challenges in those tax years. We had progressive tax and social insurance from the 19th to the 20th century. We had international corporations, institutions like the IMF and the OECD to promote transparency and regulate taxes. All while these were going on, it was to try to help us to kind of fine tune our taxing system. And then we had digital economies that came later. So now let's kind of step back and talk about what we learned so far. So far, we learned that wars were the drivers of a lot of tax innovation, major wars. Then we talk a little bit about state tax. And we're going to talk more about state tax and where they came from. But if you think about it from the historical sense, that was land imports and goods that determined the early tax system. And then we came back to the more complex economic tax system, which kind of formed the modern tax system. Modern economic economies require sophisticated legal codes, audits, and withholding system. And then we're going to take that and we'll talk more about that later. And then there was the shift from the in monetary taxation from the in-kind taxation. So that's where we are right now. Okay, so let's fast forward to the US taxation system. So, the US, in the United States specifically, the taxation evolved from simple colonial levies. They had levies to today's complex federal systems. And so, this was shaped, though, by a lot of political conflict. First, as I noted prior, the Civil War. We had to finance the Civil War, and then we also had to finance World Wars One and Two. So we had a lot of constitutional changes and economic modernization that really began the modern tax system as we know it today. So basically, what happens, the taxes in all the first 13 colonies were relatively low. But as the issues of war became more prominent and we added more states, then the tax system became a lot more complex. So what happened then, the early years, we had that big cry from the first 13 colonies. Remember, the colonial wars were fought, and we had the colonial war was because the United States, as we knew it then, were only a few states, and then they said, well, we don't want to be represented by Britain anymore. We don't want to have a king. We don't want to be paying taxes if we're not being represented. So the outcry was taxation without representation. So a lot of you may have heard that. So then there were a couple things that happened. First, we had the Stamp Act, which required tax stamps on legal documents, newspapers, and all of that. But the colonists then they still didn't like that. And then there was the Townshend Act, where there were taxes on imported goods like glass and paint and tea that were collected at the ports. Sounds similar to our modern tariffs. And then there was the Sugar Act, where the government started taxing sugar and clothing and coffee, etc. So when we think about it, we move from those years to what we call the tariff and excise years. Those happened After independence, after we got our independence in 1776, the federal government started relying on tariffs. And tariffs are imports, primary, it was a primary revenue source on imports. That is why tariffs is also a big red flag and a really hot topic today, because the current government figures we should go back to the tariff system. But it doesn't work as much in the modern system because technically it is just an additional tax on us. We're the ones who pay it because the corporations literally pass through those taxes to us. So we'll spend a whole episode on tariffs in the future. Then there was excise tax. These include the tax on whiskey, and this triggered what they called the Whiskey Rebellion. If you want to learn more about that, let's ask and we'll talk more about that. But it was a rebellion because people kept saying, why are you taxing whiskey? Then came the property and poll tax, which was a local tax at the local level. We still have property tax here, and we still have toll in a lot of the states. At that time, there was no permanent federal income tax. So, if you think about it, there was no income tax. And then the 16th Amendment, like I mentioned before, began really the modern income tax system. The 16th Amendment was authorized by Congress to levy income taxes without apportionment. What does that mean? So, apportionment pretty much means that there was no specific reason of expenses for the taxes. So apportionment was a thing that people would think about, and they were like, okay, we want to just levy taxes, but we don't want to apportion it anyway. We want to just be able to tax. And of course, people protested. So some of the key features of this core concept were the progressive tax structure, where higher earners would pay higher rates, which also is very political in our society today. We have some progressives who have said people who earn more should pay more. So this is nothing new. This has been going on for quite a while. Then we have the initial rates that they were very low. They only started out at 1% back in 1913. Just 1%. If you earned over income of $3,000, you would pay 1%. And so after World Wars One and Two, and after 1913, then came the Social Security Act. But here's something that's really important. The income tax that were levied to pay for World Wars One and Two were high. They were like 77%. And people were just really outraged by that. And so we'll talk a little bit more about that. However, in 1935, we had the Social Security Act, which introduced a payroll tax. In 1943, we had the whole idea of Medicare taxes, also in Medicare taxes, also in the 1930s, that came about. And then a lot of states started to also adopt their own state tax on sales of good, or what we commonly call sales tax, in the 1930s as well. And then came inheritance tax, or what we call death tax, and the estate taxes. All of those fully starting to develop the modern tax system in the United States. And then in 1969, we had the alternative minimum tax, which ensured that high income earners would only pay a minimum amount of taxes, like a minimum amount, that meaning they could not get away from taxation. So let's talk a little bit about what is driving US tax, kind of wrapping up this first session here. Wars finance the tax. Economic modernization requires new tax system. That's why in 1913 we needed a new tax system. So the 16th Amendment was the constitutional amendment used to do that. And then after that, taxes became a political ideology that drove the reform, the simplification of rates, and the sophistication of taxes. The research credits for the topics of the history of taxation are based on information from the IRS, Wikipedia, National Archives, etc. I always want to give credits. I hope you learned a lot about the history of taxation and why it is important to our lives. Tune in next week when we will discuss tax terminologies, some policies and procedures related to how tax laws are written. And don't forget, to like, subscribe, and share, and most importantly, ask your questions in the comment sections. This is intended to be an educational platform, therefore, we will respond to constructive questions and comments.